Hello, how's everybody doing today? Good afternoon. So my apologies for not being here on the weekend nearly as much. I was busy setting up my beautiful Christmas tree and also entertaining and going to my really good friend's birthday party. Her name's Carrie. She's actually dating my very, very good friend right now that happens to be in Morocco right now, so he couldn't make it. So I decided to get her a cake for her birthday. We threw a pretty cool birthday party. Yeah, it was an awesome birthday party, and so we put the cake right there, right? Someone distracted her. She left the room for 5 minutes. We put the cake right there, and we lit all the candles. And then I gave everybody a sparkler, those 30 centimeter ones, huge. So all of us are holding a sparkler. Cake is lit. She walks out, and the look on her face, her jaws dropped. Not because the cake was beautiful. This was the cake right here. But because the fire alarm started going off, and because it was in an apartment, we thought that the fire department was gonna come as well. So everybody's grabbing their winter jackets. The place is just smoked up because of all the sparklers. And you can imagine the look on her face, which is probably a birthday that she will never ever forget. And other than that, I put out my Christmas tree, got all the lights going and everything, and I'm extremely happy to be getting ready for the Christmas season already because it's my favorite holiday of all time. And other than that, guys, big announcement. I will no longer be having my Udemy courses on Udemy after actually next year. Whoever still has access to it, you'll have access to it indefinitely, forever, and permanently. It will not be taken down. But the people that don't have access to it will not be able to get it anymore, because Udemy has now forced people to create coupons every so often to encourage sales, because they make more of a commission on it as well, etc. And I don't like the way that they're forcing people to have this new coupon program, which is really unfair in my opinion, because you can only create a limited amount a month. And because of those reasons, anybody who has anything on Udemy, you'll understand exactly what I'm talking about. So guys, if you are still interested in my course, what I have been doing for people is unreal, and it will only be for probably the rest of this year, because I'm 1000% confident they will not be around anymore, and you will have to message me privately to get the course. So right now what I'm doing is I'm doing it 180 American dollars for all 3 courses. This is going to be my basically 1-year anniversary sale. 180 American for all 3 courses. Or if you're interested in course 1 and 3 as a bonus for free, or interested in course 2 and course 3 as a bonus for free, I'm doing course 1 and 3 or course 2 and 3 by $100 American in crypto. So if you guys are curious about this deal, message me on Twitter. Make sure you're talking to the right person always, right? And my Ethereum address or Bitcoin address is down below. All you got to do is to send it by crypto, the 180 or 100, and then send me a screenshot of your transaction, and I'm going to give you the voucher right away so you can access it. For those that are very curious about getting the course, now is the time to get it, because they will not be around anymore. They are on sale by more than 70% right now, so it's in your best interest as well, especially if you have seen the reviews and seen the way that I have traded and the way that I do technical analysis. It's proof in the pudding as well, right? That my accuracy rate has been one of the highest in crypto, transparently, because of my style. So hopefully it'll help you guys as well. So let's get into this technical analysis without further ado, shall we? Okay, so we are going to take a look at this from a really big picture. Oh, by the way, guys, do you like the way that the sun is hitting my desk? This is the type of exposure that I get right now, okay? Over there is from the north. The sun rises from the east, which is behind me, right? So right now, I get the whole exposure right now. Actually, sorry, that over there. Alright, so we're going to take a look at this from a very broad perspective today and do an amazingly detailed technical analysis. Do not ever, I'm going to give you guys the best advice you can ever get when it comes to trading. There are no shortcuts in life, and there are no shortcuts in trading. If you want to succeed as a professional trader, you will put in the time, and there will be no such thing as a TLDR, which means too long didn't read, which also means where should I buy, where should I sell, which also means it's too long, I don't want to read it, give me a summary of it. do not ever watch a video half-assedly, okay? The people that watch my videos, they know that my content is unparalleled. I would love to see a more successful trader on Twitter and YouTube than I am. And I'm saying that in a very confident way because I know exactly who I am, how I got here, and what I have provided to you guys. And I'm talking about real life lessons here of just never ever giving up on yourself and always putting in that diligent hard work. Otherwise, you will never get to where you want to be. My place is pristine. I've got a routine that only successful people can mimic. No lazy person will ever be able to do what I do, I assure you. If you guys are interested in my technical analysis and you appreciate the work, give me a thumbs up. Let me know I'm doing a good job and you appreciate it. That's all I'll ever ask from you, right? But what I'm saying is that, guys, put in the work. This video is going to be long, I'm telling you. All of my videos are going to be long because there's a lot of detail. And you guys need to know this information because I kill it in the market. Right now, I'm trading with a bankroll of over 50K American right now, leveraged to over 160K sometimes. And I'm doing this very privately. And trust me, I've got some major plans of live trading. Maybe you guys don't even know this, but I'll drop the hint because I know a lot of people just skip these parts. Maybe I'm recording the most epic level 2 series for you guys still that's taking over 3 months to film. Maybe I'm recording some really crazy live trades, like I'm creating from a 20K to 60K, you know, trading live series. Maybe I'm also creating a 50K to 100K live trading series for you guys. So there's a lot of things in the work right now, and I assure you that just stay tuned. You guys know my rep and what I'm capable of, and I cannot wait to be able to share more information with you down the road. So guys, always take things with a grain of salt, but also remember that don't ever be lazy when it comes to crypto. Put in the time, put in the work, put in the effort for technical analysis. Let's get on with this. I've got a lot of energy today, guys. I'm in the mood to just kill this market. So before we start, I'll tell you right now that I am interested in a long. That's right, in a long. All right. So, first of all, let's look at the monthly, okay? Okay, excuse me, I just have a little, there we go. So, let's take a look at the monthly first. Always start out with the monthly, and it's looking pretty indiscernible right now, undistinguishable. From what I know, we had ourselves a huge candle, right here. A huge bullishly spinning top candle. A bullishly spinning top candle is this. Let me explain to you. It is a candle that is like that. And the significance of this candle on a downtrend is huge. So we're getting bearish candles, bearish candles, bearish candles, and then this bullishly spinning top. A bullishly spinning top implies that there is almost the same distance going up there as there is from down here. So that this is the O, okay? This is the open. This is the close. Close. This is the high. Okay, I shouldn't even have to do this because it's understood, but I will for you guys just to be very clear and concise. Open, close, low, high. What this means is that the first thing that it did most likely is that it opened there and then the bears pushed it all the way down for the month. But sometime within that month, not only did the bulls defend and pushed all the way back there, that is why the long wick is created, but they also pushed it all the way up there to the high and then eventually closed there. That's most likely what happened. But of course, we can also say some things like, oh, it opened here, and then the bulls pushed it all the way up there, and then the bears pushed it all the way back down there, and then the bulls pushed it all the way back up. That could have happened as well. But the point is that the bears tried to push it down, they lost, and the bulls pushed it really high, creating a wick with a huge body of where the majority was traded. That is what that refers to. So when we look at the monthly, we're getting a very nice candle there, right? but it's also too early in the month right now at only the 10th. Therefore, let's go to the weekly and see how this weekly actually started. So this weekly right here, guys, it actually ended yesterday, and now it is a brand new week that will be the first day in the week to close in a few hours. So the way that we're looking at this right now on the weekly is support for 35 days there roughly on the 55 EMA. So I'll say firmly right now that the lowest that I think this will get is roughly around there, wherever that ends up being, around 8200-ish, 83-ish. Okay, that's a longer term projection and analysis. On the weekly, we have now officially fallen below the 21 moving average. Because we have fallen below it, we're now going to be sandwiched into a point that will have a clear conviction and decisive way within a very, very few short weeks, in my opinion. And I do believe firmly that we will be in a bull market till December the 17th, unless there are factors that disprove it otherwise. So now that we're clear on where the week is trending, we're now going to take a look at the 3-day. So the 3-day is what scares me right now, okay? We're gonna walk down the line, do our side. We're gonna do just small price action and EMA analysis with NACD, and then we're gonna get to the real stuff, the Elliot wave analysis, okay? So let's keep it intro for the beginners first of all with this stuff, and then let's really jump into it with a hugely detailed technical analysis. So for the weekly, just to clear it up, we're getting this type of curvature, which is the worst type of curvature that we can get, because what we want is something that goes up like that, that's concaving to the upside rather than convexing to the downside. Okay, so now we go to the 3-day and I take a look at here. There's no decision yet. What we obviously want is a curvature to the upside, but of course what tends to happen quite often, which we have all seen me describe before, is this type of curvature that ends up really biting us back because it's not what we want. So this one will be red. I'm extrapolating it to give an example, and this one's blue, and this crossover is the one that we want. Okay, so that's what we want. And then if this happens, of course, we get this low curvature to the upside, and then we actually end up getting this to the downside right here. Okay, right there, just a few more histogram peaks down, and then we finally go up with this point right there as the main point that we want to show interest in. So right now we are at certainly a crossroads where the bulls and the bears are fighting with massive tension, and this could easily be an X wave failure that will have a very deep correction. But this is what we are here to do, to evaluate it, and as time goes by we'll be able to react rather than predict a lot better, because like I've always mentioned, the best traders are the ones that are reactive traders, not the ones that are planners, right? Not predictive traders. So here on the 3-day, I do see it rejecting at the 55 EMA, which is scary because we are getting some sort of doji candle here, but it's not a doji that is showing a reversal. It's a doji that's showing a rejection to the upside heavily. On the 2-day chart as well, of course, we're sandwiching in between these regions as well, between the 55 EMA and the 200 EMA. But this right here, ladies and gentlemen, is the most prominent moving average to take a look at, because, and also the most important, the most important MACD and histogram, because we have curved to the downside. But I'm really hoping that, and hope is not a strategy, but this is what I would like. I would like for the curvature to be something like that, so it will show reversal. And this is the most important thing right now, in my opinion, is that we are sandwiched in between the 55 and the 200 moving average on the daily chart, which is basically between 80 right now, like around above 8600-ish and be under 8900. Okay, 8900 and 8700, right around there. This is the sandwiching between the 200 and the 55 once again, which is very prominent. So this is going to squeeze think of these as elastic bands that will squeeze something when something is in between them. It'll push it to the upside or drop it to the downside. Okay, so right now the EMA, we didn't really get that high of a moving average, which is actually very scary. And if we look here, we're getting pretty much the same RSI, which to me could almost mean a continuation to the downside as well. So it's not looking good on the daily in my opinion, especially when we got this, like on the daily yesterday, we got this huge bearishly engulfing candle, which is very nasty in my opinion. Okay, you look on the 12-hour chart as well, right? We tried to sandwich it between there to squeeze it to the upside, and of course we got rejected to the downside. Let's keep moving down. On the 6-hour chart right here, what we're getting is a potential death cross that's going to happen in a very few short hours, and I'm talking about probably in less than 24 hours if this does squeeze to the downside. The only good news I see on the 6 hours is that we're getting a higher high, which to me is actually beautiful. Give me 1 second, guys. I'm sorry guys, I just had to message someone really important right now. Okay, anyways, let's get on with this. Yeah, I'm really sorry about that. Sometimes I get distracted and I lose my train of thought. So right now on the 6-hour chart, we're getting a death cross potential once again. Moving down on the 4-hour chart, I do see this coming to the downside. This is a beautiful thing for me to see actually, okay? And I'll tell you why, and I'm going to extrapolate it like how I've always seen it. That could go something like that, right? And then we actually go to the upside. Okay. And then, it goes up something like that. Maybe not just like that, but like a better extrapolation could be something like that. But this is the point that we make note of. This crossover. So yeah, right now, clearly we're seeing this type of curvature, right? Clearly, I'm just extrapolating what I see, and that looks beautiful to me so far. So on the 4-hour, we're getting a series of higher lows all the time, and that looks beautiful to me, right? Every time we get some sort of major crossover to the downside and then one to the upside, something happens. So now, we're just walking down the line, which means going from a high time frame to a low time frame. We done with this? Yeah, I think we are based on just price action analysis. There's only so much you can do with this. And actually, I'll make a few more points with supports and resistances, okay? So now, I go down to over here. Of course, I'm going to get some sort of resistance there. Resistance that's now a support. So is it true when I say that this particular point right there was a resistance? And now it has turned into a support, right? Not too bad whatsoever. And then if we fall down below it, guess what? Guess where another region is going to be? Right around here, okay? So this is my area of major interest of going long, and I don't need that much confirmation to go long on it. You know why? Because I'm so into the the Fibonacci retracement of the golden ratio and inside of this golden pocket right here. That is basically, it's almost like magic that it was meant to be here. Now let me show you the significance of this right here. So first of all, when we went from the upside to the downside and then we trace back upwards, you do this. Always take it from where it began to where it ended. So for a lot of people try to correct me for Fibonacci retracement, I just want to tell them that they're doing it wrong actually. So the 1 starts from up there. People think it's the opposite, where the 0, see this is a 0 and that's the 1. No, it means that if this is the 1, that means 100%. So if it goes back up to 1, that means it goes up 100%. If it goes up to 0.382, that means it retraced 38.2%. if you guys did it the other way and 32% was up there, obviously that's way more than 50% if it made it more than half. And by that simple deduction, you're wrong if you're doing it the other way. So when we go from high to low, we get a Fibonacci retracement of right at the golden pocket. That's not coincidence to me. It's just how the golden ratio works. And then when we go from the downside to the upside, what we see is that it literally just grazes 618 again. Okay? So now if we go to the upside here, you know, my target eventually will be 11.4K. Still the same target, guys, 11.4K at least. And now watch this right here. Now that we're looking at it coming to the downside, is it okay to say that this region right there, where it bounced right now, was the 0.5 Fibonacci retracement level, and then slightly below it, we get all of these supports over here down to the golden pocket. So is it safe for me to assume and say that the golden pocket right between these regions, 0.65 and 0.618, sorry, 0.65 and 0.618, those are very valid numbers to be looking at a retracement to have an opportunity to go long on it? Because if I'm looking at this particular retracement and I took the most conservative approach, let's say I'm taking it from the high to the low of the Fibonacci retracement, and I averaged out my price to enter above 8,500 or right around there, we'll see. Okay, let's just say I did my basic risk to reward calculation where I entered around 84, let's just say 8550. Okay, a horrible entry. Actually, let's just say 8600. Not the best entry, but we got more confirmation. Of course, I'm gonna target right here. I'm gonna target the 382 level. So what I did was I took a Fibonacci retracement, okay, of that high right there, okay. Oops. Right there to the low of where I would have entered. Okay, and then I say to myself, my target will be the 382 level, roughly around there. And then I do my risk to reward with about a 2% stop, or even slightly below the 6.5, 2.75% stop loss perhaps. I'm now looking at 7.14% gain at a very conservative target around 9,200. And then my play for that 9,700 entry, you know, and the 10,250, 10,500, if you remember my detailed risk calculation, that's still on the table. But those criteria need to be met. So the way that I trade is not I come up with some theory or plan and it falls through and I scratch that out and I come up with a new one. No, it's more like I come up with a plan and it's going to be in my binder, right? It's going to be in my Excel, whatever I keep it in. I keep mine in Excel actually. And then those will come to fruition as backup plans. It's kind of like formulating many different war strategies, but you're only going to go through one of them, but you're always going to have these backup plans for if things come to fruition. So that's the way that I'm seeing it right now, okay? So that to me is a beautiful entry between 8,000, like right around there, 8,400 to almost where we are now, 8,600-ish, 8,650, 87. Those are beautiful. Now let's get to a detailed Elliot wave. Actually, not too detailed. Don't want to overwhelm you today. A better video will come out tomorrow. So we know that this is the first impulse wave going up. Let's be real, right? And we also know that this right here this could be a case of threes, but it has 5 subdivisions in here. So I'm not really a fan of that, the way that we were describing that before. So I will stick to my guns and I will call this WXY. This is the W, the original point of where the ABC ends. This from W to X is where the impulse wave attempt began and failed. And then X denotes the point where failure occurred because 3 waves only formed, which is now called ABC because of the 3-wave structure rather than the 5. And then we get a deep correction over here. This is most likely ABC right here. A, that's B in my opinion. That's C, because this from A to B, It dropped. There you go. That to me is ABC. Okay. Not the best. And here I thought it was very simple as well, the count. Super simple. 1, 2. This is most likely the 3 down over here. A, B, C, and the 5th down there, which now officially completes the WXY. Therefore, we are now at an impulse wave going to the upside, and we're here to figure out if this is going to be a failed wave or not. So before I move on with the detailed EW count, I need to point this out right here, that it is in a channel, flat of some sort, but I do not see waves of 3s. Yeah, I do not see waves of 3s whatsoever. I see this officially as my wave 1. No matter what anybody says, that is my wave 1 right there. And the way that I saw this is an ABC that was heavily truncated. Alright, very truncated over here. I thought that was alright, okay? And the reason why I thought it was good actually was because it made a very bullish retracement. This can be broken down easily, by the way, guys. Really, really easy from A, B to C. Try it, guys, if you haven't already. So this retraced to a bullish level between the 382 and the 0.5. I won't pick up my phone again, guys. I know that can be irritating. I'm here on your time, so I apologize for taking it up there by checking my phone. Won't happen again. And I'll make sure it doesn't vibrate on the desk as well, because I know that can be very irritating. So anyways, we see it's retracing around here, right? So now the way that I saw this is beautiful. I saw that as my ABC that was very truncated, okay? And then I saw this as actually my X going to the upside. So I saw this as my wave going to the upside, which actually ended up just miserably failing. And then I saw this right here as my W. I saw this as my X. And I'm looking for a Y, right down to over there. And my Y is going to be in this specific region, right around perhaps here, right where we hit the low. I just want to test it again, okay? I want to test it again, and if we actually end up hitting here, I will certainly go long on most likely Bitcoin or an alt. And the reason I say an alt is because if Bitcoin moves, say 10%, an alt will end up moving about 20% or maybe 15. It moves a multiplying factor of that coin. So the reason I say this as X is because I think this is perhaps a 1, 2, and that's a 3. Actually, I couldn't even begin to tell you exactly this specific count. Let's deduce it together. Yeah, I'd probably say it's something around here. Right? Right around here. It could have been a truncated 1, 2, 3, 4, and perhaps a 5 super truncated. Or even 1, 2, and that's all 3, and that's 4, and that's 5. Okay, and now we're making an ABC to the upside, and then we make another Y down over there. Something like that is very possible as well. This count needs to be dissected further, but either way, this particular zone, that is certainly an ABC with a truncated C. That is certainly an impulse wave that tried to break up to the upside in a small little channel, but of course it ended up getting very defeated and it broke to the downside. So yeah, this right here is my idea of a very good possible trade coming up with many confluent reasons for the ABC that finished, W to the X that failed, and the X to the Y that's about to finish as well, combined with confluent reasons such as this particular zone that is in between the 0.5 and the 618 Fibonacci level. I think that it's a very good place to be interested in it. And also if you take a look here, you will notice as well that slightly channeled. Go to a higher time frame and you'll see that wick just beautifully, right? So now the question is, will it get to roughly 9,000 again? If we do get a retracement, it's going to be a beautiful one, but don't bank on it getting higher than that for now. That's why 9,200 was roughly the target. but realistically 9K will be the target. 9,100 could be the target, right? Just around there. But I still think that there's a possible chance to have a fairly decent percentage gain that's coming up very soon, right? And on the bear side, guys, I can't even talk about the bear side yet because we haven't broken through this golden ratio point. But my bear scenario will be if we break well below this 84.50 range, and then we simply just downtrend all the way to the 8K range, which is at the 0.786 Fibonacci level. So there you guys have it. You know, I was gonna make this very long, but I decided not to because it's not fair for you guys. I'm taking up too much of your time. And also I just got back into it, so I need a little bit of time to do a further analysis. So anyways, thank you very much for joining me. For those, once again, that are still interested in my course, now's the time to pick it up, guys. Check out the link below, or the address below. It's got my Ethereum, Bitcoin in there. Do it for 180 American for all 3 courses, and or 100 for course 1 and 3, and for course 1 and 3, or courses 2 and 3. So just hit me up anytime. They will not be on Udemy after this year, guaranteed. They will all be taken off, and only the people that have access to it will still have access to it, and they will have access to it permanently as well. So a lot of people are still expressing interest. It's gotten tons of positive reviews. I'm answering as many questions as I possibly can on Twitter, so please get back to me right away if you are interested in it, or if you have any questions in general. So have yourselves a great night, baby whales, and don't forget, guys, check out the merch still. All right, as soon as I hit a threshold, all of it is going to be donated. 10% of the profits are donated to No Kill Shelter, and also 90% of the other profit is reinvested here, and they will be given away as swag for the holiday season, which is just giveaways. They're super soft, they're super comfortable. I apologize if I'm taking longer than normal to fill the orders. I've just got so many coming in right now, and it's taking up a lot of time to the point where I gotta get someone to help me with this. And they're super soft, very comfortable. Tons of people are very, very proud of it. Like for example, this gentleman, John, he absolutely adores these t-shirts, and he wears it a lot while trading. It's a shirt that is symbolic of the journey that you have been through, okay? So he wrote just while wearing the Baby Club hoodie. Awesome. You look great, John. I know you watch all my videos, man. You look awesome in it. So if you guys are interested in the course or the t-shirts for a very good cause, which is for you guys, and a no-kill shelter, please pick it up. So I hope to hear back from a lot of you guys. So take care and have yourselves a wonderful morning. Bye now.